Much 2024 has actually been a roller coaster. The very first quarter was full of exhilaration, while the second quarter, not so much, as things have cooled off. Everyone has been asking yourself regarding the state of the market, and if there's any individual with an ear to the ground, it's crypto cost monitoring platforms. When they launch a report summing every little thing up, it's finest to pay focus. Today, we'll damage down this report for you, offer you a review of what's been taking place, and tell you where we could be heading next. The report we'll be summing up today is the 2024 Q2 Crypto Industry Report released by CoinGecko. It's a great few web pages long, so we'll stick to giving you the juicy little bits below. However, we'll leave a web link to the complete record in the summary for you to have a look at. The record starts by considering the market landscape, beginning with a review of the place market, which, to be truthful, creates rather unsatisfactory reading. After a lot of sideways movement, crypto's overall market cap went down 14% in Q2, while trading volumes decreased by 177%. Undoubtedly, that's changed somewhat in current days. Anyways, in that time, the crypto leaderboard has actually mixed around a bit. Toncoin moved from 15th place to come to be a leading 10 job by market cap. Make sure to look into our review regarding it. The link will be down below. Incidentally, sneaking into the leading 30 at the same time were Pepe, Casper, CAS, Athena's USDE, Monero's XMR, and FET, which was originally Fetch.ai prior to it combined with Ocean Method and Singularity Net to develop the Artificial Superknowledge Alliance, which sounds a little bit like something the Avengers would certainly make use of. Obviously, as cryptos sign up with the leading 30, others need to leave, and those in question were Arbitrum, ARB, Doge with Hats, WIF, Cosmos's Atom, Stax's SX, and Filecoin's Phil. The record after that goes on to what would most likely be our excellent pal Benjamin Cowan's favored page of all, which is market cap supremacy. Unsurprisingly, BTC kept more than 50% prominence of crypto's overall market cap. By comparison, ETH supremacy was simply 17.7%, while a lot of various other altcoins continued to decrease. As the record highlights, this stands for a flight to safety and security, and it's most likely that this will certainly continue for time, particularly since the Bitcoin and Ethereum place ETFs are up and running. Next, the report examines the rate efficiency of the leading 5 cryptos by market cap, along with the top 5 DeFi jobs, exchange tokens, and play-to-earn symbols. As you can clearly see from the chart offered, cryptos lost in Q2 compared with Q1 practically throughout the board. Of the top 5 cryptos, Sol took the largest loss in Q2, falling by 28%. The chart's GRT was DeFi's greatest loser, dropping by as much as 46%. Kronos's CRO token was the biggest loser of exchange symbols, and Gala was the worst performing play-to-earn token after dropping 60%. Newcomer. Notcoin is highlighted as being the exception to the rule right here, closing Q2 with an increase of 95%, although at the time of capturing, Notcoin is really down 50% from its all-time high. You win some, you shed some. The market cap of stablecoins expanded by virtually 7%, despite the 14% decrease in the total market. The gains were greatly driven by USDT and Athena's USDE, the latter of which saw its market cap expand by a shocking 134%. Definitely one to view moving forward. Various other noteworthy activities consist of PayPal's PYUSD, which grew by 124%, and FDUSD, which resisted its equivalents, decreasing by 18%. And by the way, if you're appreciating the video clip so much, reveal some love by wrecking that like button and subscribing to the network if you have not currently. Don't neglect to sound that notification bell as well so you do not miss our following one. And if you're aiming to optimize your crypto gains, after that you need to look into the Coin Bureau Deals webpage. You can stand up to 70% discount rates on trading charges, approximately $100,000 in sign-up incentives, and discounts on the very best hardware wallets around to stash your heaps. The link remains in the summary, so benefit from that before it's as well late. Okay, carrying on. Next off, the report discloses one of the most preferred crypto categories of Q2, meme coins, real-world assets, RWAs, and AI cryptos, which make up over a third of CoinGecko's internet traffic. Maybe unsurprisingly, the crown goes to meme coins, representing 14% of all traffic. What's insane is that cat-themed memes currently have their very own classification, and also that's made it right into the leading 15, in addition to the entirety of the Ethereum, Solana, and Base ecological communities. Only in crypto, folks. The report after that considers a variety of brand new jobs that launched with a low float and a high totally diluted valuation, FDV. You'll have to take a look at the complete report to see what those projects are. However, if you enjoyed our video explaining why FDV is so essential, you'll recognize that this can be a recipe for prices to plummet. And lo and behold, that's precisely what took place to these cryptos. The link to that video clip remains in the summary, incidentally. Now, the next component of the record takes a more detailed take a look at Bitcoin's BTC. As liked as BTC is, it had a fairly weak efficiency in Q2, having actually decreased by 12%. Notably, Bitcoin's halving hasn't had much of a result on rate, and interest has actually rather transformed to Mt. Gox after it began moving over 140,000 BTC after 10 agonizing years. And it wasn't simply BTC's rate that saw a decline. Bitcoin's mining hash rate also reduced by virtually 19%, the first quarterly decline because Q2 of 2022. BTC additionally underperformed versus every conventional major possession course available. We're talking the S&P, the Nasdaq, in addition to oil, gold, and currencies like the euro, and even the Japanese yen. It's safe to state the scenario has altered a bit. All the same, following, the record transforms to the just recently released runes method. If you saw our video on runes, you'll know that this was gone for the very same time as the halving, and was created by the very same dev who brought us ordinals and inscriptions. Link in the description if you desire to discover more. Anywho, the report highlights that runes haven't exactly met the buzz. When runes went survive the 19th of April, there was a rush of brand new users, and simply 4 days later, it saw greater than 750,000 daily purchases. The adhering to week, deals dropped to just over 130,000. At the close of Q2, there were simply 28,000 purchases, an overall decrease of 93%. Next, the report evaluates the spot Bitcoin ETF flows. Like basically every little thing else we have actually discussed up until now, these likewise saw a decrease. While the ETFs experienced $2.4 billion in net inflows in Q2, the total possessions under management, AUM, really went down by 7%. Once more, this has transformed quite lately. BlackRock's IBIT continues to be the leader with 35% of the AUM market share. Specifically, it has almost $19 billion in AUM and the lion's share of trading quantity at around 50%. Now, the following part of the report checks out the second largest crypto, Ethereum. It keeps in mind that in spite of the shock approval of place Ethereum ETFs, ETH's rate in fact declined by over 5% in Q2, dropping by around $300. ETH still appears to be lagging after the ETF listings. The report describes that ETH had actually been on a drop for a while, and after a cost spike produced by the unexpected ETF approvals, it continued its descending momentum once the excitement discolored. Again, it seems this pattern proceeds in spite of the listings. The record highlights that the majority of activity seems to be happening on Layer 2s and on Solana, although for the last, it's likely this isn't accurate. That's merely because Solana is coded in such a method that fell short. Purchases are counted in the direction of the overall transaction matter, which doesn't provide a really sincere view of what's taking place. Recall that Solana took the most significant loss of any of the leading 5 crypto jobs at 28%, whereas ETH just declined by 6%. Certainly, if Solana was now the best chain, this would have sustained rates, but I digress. Going on, the record notes one sector that has actually seen considerable development, which is restaking. In Q2, the number of restaked ETH grew by 34%, with 71% being restaked with liquid betting procedures. What's insane is that 95% of restaked ETH market share is held by Eigenlayer. The record after that reviews ETH's burn price, which dropped drastically by 66% as network activity decreased. Therefore, ETH has ended up being inflationary for the very first time this year, including 120,000 to its supply. Even more supply with the exact same or much less demand implies rates go lower. And well, that's basically what happened. And lastly, the report checks out Ethereum Layer 2s, which had an overall of greater than 1.2 billion deals in Q2. Taking the lion's share of these is OP Mainnet, which made up 34% of Layer 2 transactions in Q2. Generally, though, Layer 2 purchases are up 37% from Q1. Therefore, far this year, there's been double the amount of transactions contrasted to 2023, and we still have 2 quarters to go. Not poor whatsoever, given the obvious absence of passion we're seeing. Now, the following part of the report checks out Solana. As you'll understand, Solana has actually ended up being a little Adegan sanctuary just recently, and this is highlighted straight off the bat. While Sol's rate rolled 28%, meme coins and star tokens continued to outshine. By the way, we just recently did a video clip concerning star tokens, and you recognize where to head to discover it. Now, while SOL may have gotten 44% given that the begin of the year to strike the $200 mark by April, it fell 28% and has yet to recuperate to those degrees. At the time of capturing, SOL has actually been on a bit of a tear. The record associates SOL's relative stamina to the ongoing activity sustained by Pump.Fun, which has actually made releasing shitcoins less complicated than ever. It likewise discusses VanEck's application for a spot Solana ETF in late June as a reason for a spike in SOL's cost, and probably this is partially why SOL has actually lately been rallying. I imply since Ethereum ETFs are around, it's only sensible that this speculative resources would turn right into the next big point. Going back to Pump.Fun, the report takes a better look at the spreading of meme coins launched there. It's not a handful either. As a matter of fact, the report specifies that there have been nearly 1.2 million meme coins introduced on Pump.Fun, given that the 1st of July. That is insanity, and is probably a whole lot greater by the time you view this video clip. Anyhow, in addition to discussing meme coins, the report does not actually have a lot more to say on Solana. Things is, we reckon that Solana has a lot more potential than simply being a shitcoin online casino, and can also come to be the highest performing L1 of this cycle. You can discover why by enjoying our Solana update video clip linked to, obviously, below. Okay, the following component of the report assesses the DeFi sector. It begins by keeping in mind that DeFi's market cap shut Q2 with a 20% decrease, despite a noticeable rally triggered by the surprise Ethereum ETF approvals. Notably, DeFi's market cap had been regularly drifting around the $90 billion array throughout May. The short-term ETF rally placed DeFi over $100 billion, but it really did not take wish for it to hang back down to its previous degree. Next, the report considers which chains have dominated in DeFi, which has actually raised by 6% in spite of the dull market conditions. Ethereum remains king by quite a broad margin, maintaining around 70% of the marketplace share. Solana has 5% of market task, once more thanks to the Pump.Fun meme coin fad, which is about the same share as Tron and the Binance Smart Chain. The record also highlights Toncoin's growth here after the Heap blockchain drew in enough individuals to come to be the 10th biggest chain by complete worth locked, TVL. This development is credited to the success of tap-to-earn video games such as Notcoin, noting that TVL on the Load blockchain has jumped by greater than 4x from simply over $200 million at the start of April to over $900 million by the end of June. We happen to believe that Bunch could simply be getting going, And I'll advise you that you can have a look at our current Toncoin video, web link listed below. Anyways, the report after that proceeds to DeFi's community, which paints a bit of a blended image. It begins by stating that the leading 3 DeFi sectors, those being fluid staking, offering protocols, and cross-chain bridges, composed 60% of DeFi's total TVL and saw a substantial decline contrasted to Q1. These 3 sectors lost around 6% in TVL, which, offered the various other declines we've seen so far across this record, does not appear all that considerable, even if it did amount to 8.3 billion. Restaking, on the other hand, grew by almost 50%, thanks to the ETH being laid with Eigenlayer in preparation, wherefore was possibly this year's most expected airdrop thus far. However, the greatest gains of this quarter originated from Athena, with a boost of 54% in TVL. Let's simply wish the mechanics behind Athena's native ENA token and the USDE stablecoin do not have anything resembling the Terra Luna debacle. Now, the following part of the record considers NFTs, starting with trading volumes throughout the top 10 blockchains. It's pretty clear that NFTs have actually had a harsh ride. That's because trading quantities had actually dropped by virtually 32% by the end of Q2. The report also mentions that, despite having the launch of runes, Bitcoin NFT volumes have dropped significantly. While Solana is shutting the gap with Ethereum NFTs, in the meantime, Ethereum remains the largest NFT blockchain regardless of shedding 45% of its trading task in Q1. Ethereum still regulated 32% of trading volume in Q2, yet Solana was tracking by simply $17 million according to this record. And it's completely feasible that by the time this video clip gets launched, Solana can have come to be one of the most prominent NFT chain. Meanwhile, Bitcoin NFTs saw a significant decrease of 70% in trading quantity following the increase and loss of runes. Next off, the report takes a look at the distinction between NFT trading systems. At the tail end of Q1, Magic Eden surpassed Blur to come to be the biggest NFT market, and continues to be in leading position. This is despite the platform's trading volume coming by over 40%, and Blur's trading quantity in fact rising by 25% in Q2. It shut the void, yet Blur still has a little further to go. Various other platforms impacted by Runes' frustrating uptake consist of OKX, Unisat, and Ordinal Purse, which jointly lost over 80% of their trading task, and currently have a consolidated market share of just 5%. And finally, the report after that looks at NFT financing task, which, in line with the remainder of the NFT area, has likewise seen a sharp decrease of over 48%. NFT financing quantities plunged by over $1 billion across Q2 as NFT winter months continues. Blend continues to be the market leader for NFT borrowing, controlling with 93% of loan volume, but that's not to claim it also hasn't taken a hit. Back in January, Blend saw $870 million in loaning quantity, but by the end of Q2, it rested at only $287 million, about a third of what it was only a couple of months ago. Okay, the last section of this report takes a look at various exchanges, beginning with the leading 10 centralized exchanges. It notes that these reported $3.4 trillion in trading volume in Q2, a decrease of 12% given that Q1. Binance has maintained approximately 50% of the market share, keeping it conveniently in very first area. Bybit has actually arisen to become crypto's second largest centralized exchange, with a market share of 12% by the end of June. And if you wish to enroll in Bybit, you'll want to view our Bybit exchange review and be sure to utilize the Coin Bureau Deals webpage to make use of approximately $60,000 in sign-up perks. The links to both of those are in the description. Currently, of the top 10 centralized exchanges, only 4 saw positive growth in trading volumes in Q2. These included Gate.io, which rather remarkably grew by greater than 50%, BitGet, which expanded by 15%, and HTX with a growth of 133%. As for decentralized exchanges, or DEXs, these have actually seen favorable growth of 15% general in Q2. Hooray! The leading 10 DEXs taped over 370 billion in spot trading quantity, and as you've possibly guessed, this is once again many thanks to meme coins. Uniswap is unsurprisingly the biggest DEX out there, which liquidated Q2 with 48% of trading quantity. That's actually 4x greater than the second largest DEX, PancakeSwap. Meanwhile, Drive was obviously Q2's biggest gainer, with trading volumes going up by over 5x since Q1, while the second largest gainer was Aerodrome, which grew by virtually 4x to enter the top 10 DEX leaderboard. Next off, the record looks at spot DEX trading volume by chain. Ethereum is once more kept in mind to be one of the most dominant chain, and despite trading quantities trending downward between April and June, Ethereum saw $162 billion of trading. On the whole, trading quantities on Ethereum DEXs increased by greater than 12%, considering that the beginning of Q2. DEX trading task on Solana likewise stays strong, comfortably taking the second place after surpassing Arbitrum back in March. Arbitrum now being in fourth area after being surpassed by Base, many thanks to trading volumes being increased by, yes, you thought it, meme coins. Blast handled to damage right into the leading 10 by the end of June with simply under $4 billion in trading quantity, accounting for 3% of the market share. That might not seem like much, however Blast's trading volume had actually grown by 474% in Q2 alone. And that pretty much brings us to the end of the record. What does all this mean for the crypto market? Well, there's no rejecting that this report exposes some extremely bearish undertones, specifically when contrasted to the start of the year or the back end of 2023 for that issue. Basically, whatever has taken a hit, and a lot of that can be credited to a solitary element, an absence of retail financiers. You'll no question understand a lot of crypto's task recently has actually either come from huge investors pumping money right into the place Bitcoin and Ethereum ETFs, or it's been experienced retail and mercenary capital betting on meme coins. The reality is, without a significant stimulant, retail financiers aren't likely to return in the methods we have actually seen in previous cycles.